Welcome to ForexTV.com. It's Tuesday, October 23rd. I'm Remy Hokie for your New York Forex Market Buzz. In the North American session, the U.S. dollar has weakened against the euro after the pair closed nearly flat at the end of yesterday's New York session. As of 1:45 p.m. Eastern Time, euro dollar is trading out at $1.4246. Meanwhile, dollar yen is at 114.66 yen after earlier touching 115.03 yen. The yen has declined the most in 3 weeks against the euro, tracking gains in equities, and earlier fell to 163.96 yen, ending the three-day rally. Joining us now is Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us on this Tuesday afternoon.
My pleasure.
Well, in the wake of the weekend G7 meeting, euro dollar hit a record high of 143.48 in the overnight session. But in today's session, we're seeing the euro regain strength, although over a cent, over the record levels against the dollar. And as equities have recovered globally, going into the Asian session and also tomorrow's New York session, what is your range for euro dollar?
Well, the euro dollar is a function of what the stock market's been doing lately. As you mentioned, after the G7 meeting, initially the euro had moved up higher off of no comments on the dollar weakness mainly, and then plunged down to a low of 141.25 from a high of 130, 43.50 or so, and that was mainly in reaction to some liquidation in the euro yen, but then that started to rebound, and it forced the euro back up. We got the Apple earnings last night, and next thing you know, the stock market's going to be opening higher today, and which it does forces the euro back up to where it recovered basically 50% of the loss from Monday's low. And we just right now around the 142, 44, 46 level, which is exactly around the midpoint of that range, and it's going to be continue to function of what the stock market does in the short term, and that is going to be a function of some of the economic that's going to be coming out. So I see it is positive for the euro. Obviously, the euro's been bid. It's been bid against the crosses. It's been bid against the dollar. Some of the one interesting seven as well. Some of the finance ministers were talking about the strength of the euro, saying the Italian minister was quoted saying that strong currency and we have to learn to live with it. And the German finance minister was saying how the euro, his country. They do trade in Germany, their trades in turn the euro sit with him, so the effect of the euro doesn't really have that big effect on their trade. So these things sort of support the euro. So I'm not surprised it's up. It's going to have to stay above the 142.37 level, is that 50% mark. We should be able to move up toward 142.65. We get through that level, and we could head up to sort of test the 143 level in the euro. Sterling's bid as well. It was between 202.50 and 204.50. It's now trading above that today at 204.94.96. So it looks pretty good. As well, and that was bolstered a little bit by some comments from Bank of England officials giving some positive comments about the economy there. The yen is a wild card. It kind of goes up and down with the stock market, and it has good support at the 114.50 level, and if it should break that target down to 114.12. On the upside, there is it went right up to resistance, good distance at one today, and that should top the upside on that currency pair. So that's sort of basically how I see the dollar reacting into the market over the near term.
Okay, you just mentioned dollar yen, so let's move on to the yen crosses. The New Zealand dollar and Australian dollar also gained against the yen today, and as U.S. equities advance into the green, dollar yen has also been gaining in the afternoon session. So if you could give us your levels for the yen crosses going into tomorrow's session.
Sure. Yeah. We saw the big liquidation in the carry trade going into the weekend and G7, and after the weekend, and then something sterling yen hit a high of 240.67. It came down to 230.22. That's big figures in that currency pair. The euro yen did a similar dive, going from 167.70 down to 160.43. And then the Aussie yen and the did very similar pattern, losing a lot of steam as the stock market started to get hit. And as soon as the stock market gets hit, so do the carry trades and the risk trade, the risk appetite trades, so they call them. So the started to take charge a little bit. And again, that earnings came out, and that forced the stock market, forced the carry trades to go up as well. And so they are like the yen and the very euro and spot. What's going to happen in the stock market? When the stocks go up, the carry trades go up. And we tested, today though we tested the midpoint of the decline. For the sterling yen, that came in at 235.50. For the euro yen, it came at 164.6. And from those levels, they started to reach. They got up to those levels and they came back off as we got some weaker economic news out of the Richmond Fed. Going forward, I see the euro yen supported at the 163.20 level, and if it gets below there, 162.85, and this level is clearly at the 164.06 level. So in the sterling yen, I see support on 234.40 and 233.85, and resistance at the 235.50 level. In something like the they have a very similar story to the euro yen and the sterling yen, with the pair plunging down as the stock markets declined on Friday. But they too bounced back up to 50%, up to the 103.06 level. And the market's going to need to get above the 103.06 level for it to a little bit more positive. And if it does, it'll target the 103.80 level. And 104, that's the 104 level. So it's becoming more of a stock trade as opposed to a necessarily a carry trade like it was more in 2006 and the beginning part of 2007, 2000. As the risk is as those pairs up, it's more or less been a proxy for how the stock market moves, and simply I'm going to buy sterling against yen because I get carry profits on the trade. So I see it continuing back and forth action with people getting stopped on either side. Hopefully the astute trader will control his risk and not get too immersed in necessarily the carry profits, but just looking for the trading profit, the profit when he has it, and protecting the downside or when the position goes against him.
Okay, you did mention the stock market. Well, next week, the Forex market, the stock market, as well as the commodity market, all are awaiting next week's FOMC rate announcement. But ahead of that, we still have U.S. housing data, including existing home sales and new home sales. Well, with fundamentals not in favor of the dollar, with expectations of more soft data, what do Forex traders need to keep in mind, both in terms of fundamentals and event risk?
Right. Well, clearly the biggest problem in the U.S. is the housing market, and what the effects may have on the economy. Still quite unknown as far as the effects on the economy, but what we do, the housing market is in a slump. There's still a lot of houses for sale. There's still a lot of new construction that's for sale, and it's not going to. It's not the thing that gets just better overnight. So we're going to continue to go through these cycles where we have the existing home sales, which are supposed to be weak. We're going to have the new home sales that are supposed to be weak. And it depends upon how weak they really are. And then the knock-on effects of how those sales affect the credit markets, particular, and we know that the financials are, some of them, some of the bank earnings came a little bit better than expected, and then you get surprises from, or not surprises, but the Bank of America earnings come out with much weaker, Merrill Lynch earnings weaker, and so on and so forth. So it's going to, again, the market is going to be under the microscope, looking at every little piece of data, just like the Fed's going to be looking at every little piece of data going into the meeting next week. And I'm not sure if they have, although the market is discounting, I think there's like an 80 to 90% chance that the Fed is going to cut 25 basis points at the Halloween meeting. I'm not sure it's, I wouldn't put the percentage of that high at this point, but come that meeting date, we'll have a little bit more information. We'll have durable goods. We'll have the home sales data. Another piece of key data, which I think is important, is the initial claims that come out on Thursday. If you recall, last week it spiked up to 337,000 claims, which was much higher than expected. And this week they're expecting it to come back down to 320,000. If it stays up in the 337 to 340 region, that may be enough for the Fed to deduce that there are going to be knock-on effects as a result of the weakness in the housing market. So far, the employment situation has remained, not stellar, but not fallen out of bed, and that's a result of the multinationals and the weakness of the dollar and the increase in business overseas that is propelling some of the stocks, especially the multinational stocks. So that's what the traders should be looking at and evaluating going forward, and see how things pan out. And what we will know more next week, and the Fed's going to be watching everything as closely as we are as well.
Okay, Greg, thank you very much for insight and analysis, and have a good afternoon.
Thank you.
That wraps it up for Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hoki. Join us later this afternoon Eastern Time for PM Exchange right here on ForexTV.com.